Woo-wee! Welcome on back, everyone, to another Stock Market Open live stream. Market opens in 15 minutes, 45 minutes until the JOLTS report. Some stocks that you want to pay attention to today, obviously DJT. It's been up another 17, 18% here in the pre-market, up to 20%. It is starting to cool a little bit as we go into the open. Keep in mind a lot of this correlation between Bitcoin, between DJT, between bond yields rising, MicroStrategy going up. A lot of this is a bet on Trump. So there is this largely expected reversal that people think could happen if there is, as Wall Street says, a quote surprise Harris win. I don't really have any freaking clue who's gonna win. I just know, hey, I'm going to be covering the election. Whatever happens, happens. We're going to watch it really closely. I think if anybody's really passionate about a particular candidate, you better vote. So we'll see what happens. But this will be very entertaining. So some things that I'm watching, I am watching UPS a little bit. Mostly because a lot of folks got really excited about UPS raising guidance, but I didn't actually get so excited when I went through the UPS earnings call, because what it sounded like to me, and let me try to pull up the transcript here so I can look at it again. But what it sounded like to me was that UPS was actually constraining their supply. And in doing so, trying to become more profitable, which is fine. Like I get that. I'm all for businesses trying to generate more profit. That's why businesses and corporations exist, to generate more profit for their shareholders and for really, their employees, and be able to hire more employees and be able to grow, right? These are very normal expectations you would have for really any company. And so what I thought more so was interesting was this focusing on reducing maybe the slightly less profitable supply chain routes and what felt like almost shrinking the company. And in doing so, they're able to temporarily squeeze out higher margin, but does that actually allow you to increase growth in the long term? I don't know. So I think this is somewhat interesting. Let me see if I could find it. Let's see here. Okay, so what is this one? Let's see. So they reduce discounts on certain routes, increasing revenue per package and reducing volume. That was one thing I remember that they talked about. So this idea of, hey, we're going to charge more where we can, and then sort of just do less volume. So really what you're getting is profit optimization. This is why they talk a lot about this pricing architecture. I don't know that it's necessarily a sign of this, company that is vastly expanding. If anything, it felt like they were cutting, and I thought that was weird. Another thing that's in the news today is this China stimulus talk about potentially more stimulus coming over the next few years. Let's listen in here for a moment, and then we'll come back to UPS.
She was saying, which is this could be a $7 trillion problem, real estate. Because I wanted the government there to do a resolution trust.
Right. The idea is that the stimulus in China is way too small that they're doing, and that the real estate problem is really big.
The problem here by a factor of 7. I'm like, holy.
Yeah, this report out today that the number of billionaires there has dropped by a third. Everyone's trying to expatriate money. Apple, India exports are there?
Did you see that? So.
Oh, yeah, okay. All right, so, but anyway, yeah, this is a big talk about, like, is there going to be enough stimulus to actually keep China afloat? I personally don't think so. I think they're in a deep doo-doo, but, hey, that's just my opinion. So take a look at this. This was another area where I saw it. You noted, this is back to UPS. You noted in your release that there's a fit-to-serve initiative, which called for the reduction of about 12,000 positions. So UPS, how many employees? Let me see how many employees they have. So they got about 500K employees. That's a lot. So you're looking at about a 2.4% reduction. I always think it's really important to put this stuff into context. So 2.4% roughly, we'll say. Okay, there we go. Could you expand on what that means? Yeah, on Fit to Serve, we have pulled forward. See, this is what I'm saying. You're seeing a lot of companies. We have pulled forward incremental savings opportunities. So one of the concerns that I personally think is when things slow, companies try to get efficient, but once that happens, what's next? And it's that sort of slowing environment that the risk could lead to layoffs, and that's more and more layoffs, right? And that's where this jobs data, over the next few months will be really critical. So let's see here. Reduction in customer expectations volumes, hiring for peak, and let's see here. Delivery volume declined 7.4%, so you're seeing some declines as well in shipping. Hiring 125, and they'll actually have a slight positive this year. So last year a decline, slight positive this year they're suggesting. They're not giving you a number on how positive. So let's see here, TBD, I guess. We're not going to overhire for the peak. We'll hire just what we need. Yep, that's pretty normal. We could flex up or down. That's fine. But anyway, this efficiency drive at companies like this, very, very normal. And this is how you can get some of these profit boosts. But I don't know that these profit boosts are necessarily associated with real growth when you're actually killing the less or lower profit segments. Let's see here. Return to revenue profit growth. Let's see. On our last earnings call, we said the second quarter would not only be the bottom, but turning to our performance, we would return to revenue and profit growth in the third quarter, which we did. That's great. So back to revenue and profit growth. So this revenue growth, big deal. Even in the face of package volume going down, they're talking about. In third quarter, we faced macro environment that was slightly worse than expected. Online sales slowed and manufacturing activity was lower than expected. This slowdown in manufacturing activity was true outside of the U.S. as we continue to see lower industrial production. This is a red flag here, right? So one of the things that you could see is you can price optimize, so to speak, and squeeze more rev out of fewer packages, but risk is you start losing volume permanently. There we go. I'll try to write that down and move this into right. So that's a risk factor when you try to squeeze revenue for that efficiency. Oh, we did layoffs. We adjusted prices. We cut some more, some less profitable segments, especially in an environment where macro is slowing. So we'll kind of see how things move. Average daily volume for international over at UPS was flattish, but did continue some upward momentum. Let's see here. In the US, second consecutive quarter of average volume growth, which is good. Focus on growing certain pockets of commercial business, up 1% compared to last year. I mean, they talk about growth, but you're talking about these super low digits. Let's see here. What else can we see on profit? I always like UPS as sort of just a little bit of a tell to see what companies are doing in the economy. And we'll get back into sort of how we're going. We got about 5 minutes to the bell here. So profitability going into 2025. Let's see here. Fit to serve. That's their layoffs. We feel confident. They don't talk about 2025. So the guy asks about 2025 again. I love it when they do that. The guy literally asks about 2025. They don't answer 25. Then he asks again about 2025. Yeah. So as we roll through 24, you can see we've raised and consolidated margin. See, consolidated. We expect domestic margin to be around 9.5%. Now we expect that to be slightly higher, 10% as we've guided before. We'll come back to you and get back to you on 2025, but let's go through peak season first. So blowing off 2025. Why? Well, if they were optimistic, they'd say it. IMO, this is a brief profit squeeze, common in slow growth environments, and it won't last. So, maybe I read too much into this stuff, and I always say that just so you could, take this kind of stuff with a grain of salt. But I always like to see, hey, where are they dodging questions? Maybe you can expand a little bit more on the softness you're seeing into peak season. We'll start with customer season. We work with, or customer feedback. We work with a little over 100 of our customers who represent 60% of the volume, but 85% of peak surge. That would be Amazon would be one of those customers. So we develop operating plans for each customer. They continue to tighten up their forecast, and we just received their last forecast October 2nd, okay? Their forecasts have been tempered, and it's been driven by a couple of factors. For United States, Middle East, and Asia in the fourth quarter, about 3%. Forecasts overall, low 2% to a high of 11%. Tight peak period. Let's see here. Consumer's in good shape, but we think there's some dynamics in terms of how the consumer will behave in the season. So, not the greatest optimism. I think that's probably enough on UPS right now, but it makes it clear to you, like, they're tentative. They're tenuous. It's like, okay, let's try to squeeze a little bit more EPS where we can. The early leading indicators we're getting aren't necessarily saying we're going to have the craziest growth in the world, right? Interesting. So, anyway, let's see here. Then we've got, okay, so the Qs are basically flat. Let's see here. So Rob, oh yeah, I don't think you can't hold bonds forever. It's get through some of the data over the next couple of months, and there'll be plenty of opportunities for evaluating how our economy really stands. I would guess really no later than February you'd have your answers. You're gonna get rid of the seasonal. But let's even see what the data's like this week, It doesn't have to, moving in portfolio doesn't have to be all at once. Interesting little trading range you've got here in Bitcoin. I have not drawn these lines or touched these lines in a very long time. And if you look at this, you might zoom out on this and you might go, Kevin, what are those two little lines right here, right? You see those lines up here? Let me read them out to you. It's 71,246 and 71,100. All right, you see how tiny those are, how compressed they are together? What's remarkable is if you go into the 5-minute chart, look at it dancing between those two lines. It's crazy. You had a little breakout over here, had a little breakout over here, and you just come right back. So, you got to trust the lines, my friends. Trust the lines. So, pretty remarkable. All right, so what else do we got here? Tesla was down a little bit yesterday, but it's picking up here in the pre-market. You had about a little move down, about 2.5%. Not a big deal after like a 25% move in the stock, so who cares? Nice movement up right now, about 2/3%. Enphase was up 1% yesterday, giving it all back here in the pre-market. Now you've got DJT bleeding out a little bit more. Trying to find a direction there on Qs. SoFi, how does SoFi go to -4% after the beat? Come on, man, that's some bull. They were up like 6% there for a moment. Home Depot, what is this? By the way, has anybody ever seen? It's like the most hilarious. I love it. It's a good content creator too. I can't remember what it was, but it was like how to say a bunch of brand names with like a Mexican accent. It was really funny. He did a really good job. He's a Mexican guy, but it was great. You look it up on TikTok. Every time I think about Home Depot, I think about Home Depot. It was great. I love it. So I love that kind of stuff. So what do you got over here? Carnival Cruise Lines down 2%. Tesla almost going to be up 1%. Let's see if it holds going into the open here. All right, folks, here we go. Let's get the bell.
Turkey can be a big problem for them, since I didn't even know Turkey really mattered. And then one of the things that is just constantly bothering this company, and Jonas alludes to it, these warranties, they just don't go away. And warranty speaks to quality. And David, when you have endless warranty issues, what happens is you don't know when you have a vintage.
All right, that was a short bell. I feel like they sort of let go of the button a little too early. That felt a little on the short side. Either they let go too early or they pushed the button too late. I'm not sure what they did. They screwed it up. At least that's what it felt like. All right, let's get to the unaveraged candlestick here, and let's get to some movement. All right, so a little bit of a red candle there on Tesla. The Qs are actually trying to move up, but you do have a red candle coming in on DJ Tizzle. UPS is flat. Bitcoin's sitting in its range. Home Depot is down 2.75%. I do wonder why. Is it because Jim Cramer pumped it yesterday? Let's see here. Home Depot. I don't know. It's just down. Let's see what its trajectory here has been. I mean, it's like at all-time highs, so who cares? Oh yeah, who cares? And look at this. This is fine. So it's down from 421. Who cares? It's doing fine. Dude, how the heck is SoFi down 8%? That's a scam. Look at that. That's crazy. And the numbers were good too this morning. You had beats across the board. You know, another one that's getting smoked, at least it was in pre-market, I don't know if it still is, was DR Horton. DR Horton, I think they're DRI. No, DHI. Yeah, there it is. Oh my gosh, 14%. Holy crap, what the heck? 14% at DR Horton. That's crazy. Now down about 14%. Stock down 14% at market open. Ouch. That's crazy. So, and this, by the way, on home sizes down 1% year over year, construction times falling, seeing fewer homes to be expected completed by next year versus expectations. They were looking for 94,654 homes. They're actually going to come out with 91,000 on a revised estimate. That's about a 3.9% decline versus the expectation on DR Horton. And their forward guidance on revenue is expected to be about nearly down 5%. So possibly sort of a bit of an end to the growth cycle over there. Oh, here go the Qs. I'm not sure what's happening here. There's a weird little topping out you're getting here on the Qs. Nvidia, Nvidia's having a hard time at its all-time highs. Kind of keeps getting rejected. MicroStrategy is dropping a little bit as well. Donald Trump stock is almost giving up all of its gains. Why is SoFi down 11%? This is just absolutely ludicrous. Tesla, gosh, goes negative here. Palantir, 2% down. Enphase down about 2%. Mickey D is actually up. Who reports today? Isn't it Google today? Let me see who reports today. Let's see. Tuesday PM. Yeah, Google, AMD, Snap, Chipotle, Visa, EA. You got a lot of earnings for market close. You know, maybe if y'all want, we could go live for market close and just at least like cover the earnings releases. I don't really want to sit there, frankly, and go through all the live streams together because I can much more efficiently do that. They're on earnings today. With the earnings transcripts, and then if I need context, I go back and listen to it. But yeah, I mean, I don't mind doing that if y'all want. We'll do it. Yeah, okay, that's a lot of yeses. Okay, all right, I'll go ahead and I'll schedule it, and then that way we can cover it. So I'll just call it market close. What do we got? So it's gonna be AMD, Google, Snap, Chipotle for solar report earnings. Oh, let me just make sure my calendar's clear. If it's not, I'll clear it. What do I have today? Oh yeah, okay, yeah, I'm good between that time. Okay, that's fine. All right, so we'll get to go do that together. I'll just schedule that for 1 p.m. All right, yeah, that'll be cool. So we'll go do that together. Another thing, let's see here. Let's see. By the way, does anybody have questions about House Hack? If you do, feel free to ask away. Happy to answer those questions. Filmed a video for House Hack yesterday. Yesterday was a long day. Although today is already shaping up to be a long day too, since I was up at 3 a.m. as usual. Yeah, really excited about what we're doing at House Hack. Did some property inspections and some property work yesterday. So it's kind of fun. There's a lot of like, oh, Tesla went back to positive. There's a lot of shifting of or like as Elon calls it, context switching, right? Because it's like you're making videos in the morning and then you're with the family and then you're jumping into real estate, however it is. So kind of cool. So look at this. This is you got a nice recovery coming into Tesla over here. Very, very cool. Minimum for unaccredited. We're just working on that paperwork for the non-accredited, hoping to file that for the non-accredited round. It'll probably be 10K. It'll be, I think it'll be a really good offer too. And the goal is just to accelerate how fast we can IPO. Because my goal, like I keep saying 28 to 2030, maybe we'll make it happen sooner, but we got to have a really good 26 and 7, and what we do in 23, 4, and 5 is going to set up our 6 and 7. And the more we fundraise, the more we're able to prove the awesomeness of the wedge model, so to speak. Anonymous YouTube says, what scares me about House Hack is how do you get your money back? Well, that's the thing, right? Like, it's a private company investment. So I've invested in private companies before. So I just to be transparent, like, I invested $420,000 in BlockFi, and I lost every damn dime of it. Now, House Hack isn't a crypto startup. It's literally free and clear real estate. So I think the odds of that are very, very low. But yeah, I mean, like, the company has to go public. I mean, we could go public as soon as like January or March if we wanted to. I don't know if that's in the cards right now. It sort of just depends on offers or how things play out. It might make more sense to wait a little bit. I don't know. I don't know the answer to that yet. We have not made any kind of commitments at all, and I certainly wouldn't make any guarantees. But anyway, let's go back to the market over here. So a lot of volatility here on Tesla stock, sort of bobbing around zero. You're getting rejected by that 71.2-ish. No, I don't want to call that 71.2. I've got a line. What are my lines again over here? 71.1 and 71.2, 46. Yeah. Q's still down 20 bips. What the heck, man? Dude, NVIDIA, it's trying to recover, though. DR Horton still smoked 12%. My gosh. MicroStrategy going right back up, though. Look at that. Look at that candlestick there on Bitcoin. Nice. Very, very cool. And then you've got, Coinbase got over the 218 line. That's a pretty important line there for Coinbase. McDonald's still positive. Apple. What else do we have here? Celsius still bleeding. Robinhood's basically flat. Is sitting at 95. FICO at the 2000. What else? Let's see here. Red Robin, $6. Dude, they're gonna go bankrupt, man. I'm so nervous about that company. Nervous. Not happy. Anyway. All right. Oh, yeah. How's PayPal doing this morning? I think I covered their earnings. Oh, wow. Down 6%. Serious? So their net missed a little bit, but their payment volume was actually decent. So I'm surprised about that. So PayPal, okay, some of you are asking about PayPal. Sure, I'll help you out here. So basically, their net income came in at 7.85 billion. This was a slight miss from the 788. Total payment volume 422.6 billion versus 421. That's like a nominal miss, super nominal miss. And their adjusted EPS beat. So stock down about 6% at market open. Pretty surprised by that because it didn't seem like bad news. It seemed like good news. But I guess their Q4 forecast just wasn't good enough. So I'm gonna write that now. Their growth forecast disappoints. Yeah, I'm not the biggest fan myself of the financial services sectors because I just think payment volume. Like, you're not going to see a growth in payment volume for a long freaking time. Especially if you go into deflation. Oh, my gosh. I mean, crazy, dude. Crazy. Oh, my gosh. DJT got suspended. Wait, what happened? Oh, it's going back up. Oh, it got halted on the up. And look at that. Bitcoin's going up with it. Look at this. It's all, like, correlated. It's like the algos are just trading it all together. Meanwhile, the Qs are vomiting. Dude, they better not lose the 494 line here. Technically, it's 1 penny under that, but you don't want to lose that. Will yields fall or soar? I think next year yields are going to plummet, but you know. What does house hack do? The easiest way to explain what house hack does is we buy fixer-upper homes that tenants don't want and homeowners don't want. You know, roof leaks, mold, asbestos, lead, water leaks, whatever. We fix them up, we rent them out, we hold them for 2 years, and we flip them. But we flip them with a 1031 exchange, so we don't have to pay the taxes. And if we can flip them to a fund, then we don't have to pay any selling costs, and we can pass that benefit on to any, you know, potential person who wants to invest in that sort of fund. So investing in house hack gets you the benefit of that whole process. Yeah. So we do all in-house coordination, in-house property management. We coordinate all the renos in-house, the property management. We do all of that in-house. Of course, we outsource to like electricians and plumbers and HVAC, but you should. Like, you shouldn't have all that in-house. It'd be crazy. So let's see if DJT there it is. It's open again. 14.2, 13, 12. 12, holding on to 1260, 12.8, 13. 13. Oh, this is volatile. This is fun. 10. Dude, the candlestick isn't even moving. I'm just seeing the number right here, and the candle doesn't even move. Oh, there it is. Ooh, 9.4. To buy my house? Depends on the area you're in. You know, we really try to consolidate. We don't want to be in too many different areas. Can normies invest in house hack? Wow, everybody can invest in house hack. Probably, hopefully by December, if not by January. So, take some time. Can you invest via a brokerage account? You know, what a lot of people are doing is they're investing through the... Oh, it's halted again. Halted to the downside this time. Let me get this limit up, limit down. Limit up, limit down. What a lot of people do is they actually invest through a retirement account. And they're like, dude, if this goes big, then I can, you know, invest tax-free, basically. And so they use a Roth or a retirement account, whatever. And you could do that. You just have to find a self-directed IRA custodian, which if you go to the bottom of househack.com, we have a link to one that we work with. Let me go trading halts, NYSE, trading halts, DJT. Yep, limit up, limit down, pause. Yep, in balance basically. Bitcoin's moving nicely though. Oh, the Qs are bouncing off my line. That's good. Did you see Crocs? Okay, no. Oh, down 17%. Bro. Okay. Hold on. Hold on a second. I did something I'm extremely embarrassed of. Hold on. I hated this stuff my whole life, but Jack forced me to buy Crocs. This is a Jack one. This is a dad one. And, like, I'm kind of embarrassed by it. Because, like, I've never owned these. But I will say, these suckers have a liner in them. Let's see if I can get that to focus here. And I'm very embarrassed that I own this. I will say. But, damn, that liner, whew, that's kind of nice. So, and they're daddy son shoes. Oh, the Qs are almost positive. Look at that. Let's go back to that right here. So good for that. So Frankly says, what's the benefit of investing in a house hack earning 5% versus a treasury bond? Well, I mean, you have to understand the difference. A bond gives you 100% of the upside in the company. So, I mean, I'm just going to make an extreme example. If the company stock 10x's, you get all of that upside plus the yield. That's different than a treasury bond. So, yeah. So, financials are always posted for house hack. Q4, but look at that profitable, that spike there on NASDAQ. Nice, positive here. And house hack's Q4 will be our first profitable quarter. And then that should continue into Q1 of next year. That'll be really cool. And then, yeah, we just kind of keep grinding. It's pretty exciting for a company that's been operating for like 13, 14 months. It's kind of cool. PayPal now down 17% though. Let's figure out what happened though to Crocs over here. So somebody says sports mode. Dude, I didn't even know what that meant. And somebody had to teach me that. Jack's got big feet. Yeah. Okay, what else here? So let's see here. Somebody says, what the HE double hockey stick with SoFi? I know. Are there any other companies similar to us? I don't know that there are a lot of companies that do wedge deals like we do, but there are a lot of companies that hold real estate, that buy and hold. Look at Invitation Homes, look at American Homes for Rent. These are phenomenal companies, but they're just buy and hold, right? You know, we want to roll the real estate, and I haven't really found companies that do. They're flipping companies, but they pay a lot in taxes. They take a lot of market risk. I don't think they do a great job. They pay a lot in fees. And so we're somewhat in the middle of that. And no, I haven't seen a comp like that before. But to me, the worst case is you just buy and hold. And that's not even that bad. Can foreigners invest in house hack? Yeah, absolutely. Did somebody get the JOLTS numbers already, right? Yeah, with that spike on the NASDAQ? Dude, what is this? Just like, no, it's the line. It's the line. It's not leaked data. It's the line. But yeah, anybody can invest. I think there are...
Lost the lead.
No! Q's just really bobbing around here. Look at DJT, though. What is going on here? It is really struggling to hold it. How was your vacation? Honestly, thanks for asking. Really good. Let me see if I have some pictures for you. It's, it really, I don't reward myself enough with vacations. I got to do it more. I'm really bad at it. And I'll show you some pictures here really quickly. Oh, look at this, by the way. You've got our 1-year-olds now. Look at that. You've got Ella there on the left and Claire, and they just turned 1. They are twins, not identical, but they are twins. And then yeah, just really fun time though with the fam overall here. And we didn't take any of the babies obviously, but I had to sport the house hack merch. I think this was us at bingo. You know, cruise deck, one drink because I didn't drink. Star Wars lounge is kind of cool. So yeah, fun stuff. Let's see what else I got in here. Oh, you got to take the kids to the, you know, obviously the pools and stuff. They have this little like concierge deck that you can go to, which is kind of cool, because it's just like quiet and there are very few other people there, so that's nice. But yeah, you know, I have to say they really do some great work in terms of the quality on those Disney ships. I know people are like, oh, go woke, go broke or whatever, but and I get it. You know, I like it is a little. There's a reputation with it, but then you come back to these little babies, and it's kind of cool too. Look at this, 5 babies here. Look at that, from right to left. You got Claire, Ella. There's Violet. There's Jay, and there's Summer. Summer's got her little feeding tube. She gets off. She's gonna have her first day without the feeding tube today, actually, which is pretty crazy. Okay, so the Q's lost the lead a little bit. We got 11 minutes to go into JOLTS. And how can we get house hack merch? Dude, you know, we had our Millionaire Symposium event. We gave out house hack shirts to everyone. Yeah, it was fun. But you know what we're doing now is, and we're going to do this for the non-accredited around as well. So stay tuned. But like what we're doing right now is we're doing You get to go to the shareholder meeting if you invest. You get a challenge coin at 50K. You get a vest at 100K, the House Hack branded vest. Those are like expensive because we custom make them. And then if you invest 250K, you come on a property hunt with us. You know, all the travel once you're with us is included. And then, you know, you invest more than that, we'll even throw in consulting or international consulting sessions as well, and property hunts and stuff like that. It's kind of cool. So we can kind of teach you what we do and stuff. But anyway, yeah, look at the market right now. So you've got, oh yeah, we were gonna look at Crocs. So I keep getting distracted here. We got 9 minutes to go until the JOLTS data comes out. So wow, that's a hit, huh? Oh wow, this sucker's been range bound since after the pandemic, basically. So, okay, let's find out what's going on here. I think I've looked at their financials before, but I don't know how you can grow at this company. I will say though, this so I don't know anything about this stuff. But Jack told me apparently you could take off these little thingies at the ends of them. I feel like such like a boomer or something like that. No offense to boomers, but just like I just don't know about this stuff, and he does, and he's 9. And apparently you could take these little thingies off and like, I don't know, customize them or something like that. Whatever, man. All I know is Bitcoin is at 71.6. Holy moly, look at that. Look at that jump. So pretty 5 employees right there. That's funny. What percent of house assets are in single family versus multi or commercial? It's probably like 40, just off the top of my head, probably 40 multi, 59 single, and like 1% commercial. It's a restaurant that's included in one of our multifamily buildings. Fundrise is very different. Very different. See, with Fundrise, you're investing in the individual real estate, and there are a lot of fees. So go through the fees. It's not just the 0.25. You're getting clickbaited if you think it's just a 0.25. And you're not investing in Fundrise itself. With House Hack, you're investing in House Hack itself. It's very different. So DJT back up, and then yeah, DJT halted again, dude. What is going on? Look at this vol. It's insane. As we're going into JOLTS data here, and Bitcoin's taking off, MicroStrategy's taking off. So, somebody says Bitcoin's or gold's going up too. So Crocs, let's write down what's going on here with Crocs. Crocs. Okay, well, yeah, that's not a surprise. It's a revenue growth problem. I'm gonna write it down too. Yeah, how do you grow is that company? I feel like once the fad is over, you're screwed. It was sort of like figs. All right, so let's see here. Q4 rev forecast flat. Then you have, wow, adjusted operating margins of 19%. Okay. Tempered revenue outlook. Yep, basically. Miss on growth outlook. Okay. So I wonder how much cash flow they generate though. Dude, Bitcoin is just mooning. Crocs. Oh, NASDAQ. Come on, man. Can you go positive again? 6 minutes to JOLTS. So let's see here. They're ornaments. Is that what they're called? Ornaments? Oh, okay. All right. Well, let's see here. Then you've got, what do you got? 5 minutes now to go. How's that, Crocs? No. How's McDonald's doing? Somebody's asking about MC. Tesla's down 1%. Uh-oh. I'm losing a line here. Hold on, we're gonna look at that in a moment. Oh, McDonald's rotating down a little bit as well. What's the suit for? Yo mama. Let's see here. Will House Hack hold Bitcoin? No. Can you do a video on halts? I don't understand how they're beneficial. Let me just give you like a very brief explanation. So, I'll give you a simple example, okay? So let's assume you go to a market and you want to buy bread. and you walk in with 30 people, and everybody wants to buy bread. And there's one bread seller with one loaf of bread. 30 people just charge at the bread seller. I want the loaf of bread. The cops show up and they block all the 30 people rushing. And they're like, wait 5 minutes. Yo, anyone else want to sell some bread? We got a lot of demand over here. And then they try to bring bread sellers to the market and they go, okay, open it back up. And then you could actually have a market. That's called having a balanced order book. So when you have an unbalance, you create unhealthy market dynamics. And so it's deemed better to pause the market action than to allow the price distortion and volatility that would occur if, you know, one price of bread sold for 10 times its normal price, and then other people started getting stopped out on limits that were, you know, fugazi anyway, and you just create tumult. There, that's an example. Someone says, so it's not a free market. It's like a free market asterisk, because technically the buyers and sellers are deciding what to pay, like buy and sell for. It's just the free market with a little break. So yeah, it's a free market with an asterisk. It's like a regulated free market is the way to look at it. Yeah. So let's see here. Okay, what else we got here? Da 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 da. Somebody says, looks like my website might be down. No, go to meetkevin.com. I just checked. If you go to meetkevin.com, we have the Art of War promo code on. So if you want to be part of the course member live streams, my fundamental analysis, the real estate investing course, how to make more money and get SH90 done faster. We're going to expire this coupon soon, possibly by Halloween, so within the next 2 days here. Property management, 0 to millionaire real estate sales or investing or whatever. Check those out over at meetkevin.com. Email us if you have questions, staff@meetkevin.com. You can ask anything you got. Same thing with House Hack. If you have questions, just ask. So basically flat on Mickey D's. You've got Tesla sitting, I mean, you're bleeding out a little bit here, okay? 260 is kind of an important line to hold. We've been here before earlier in the day, earlier in the year, and when we lost 260, we went back to like 214. So, you know, keep that in mind. Oh, maybe Teachables now. Okay, that's possible. We'll have to check on that later. Yeah, probably, you know, when the day opens here. If it's still a problem in an hour, let me know. You have a print shop in SoCal, make some gear for House Hack. Oh man, well, hit us up. Staff at Meet. Send it to actually ir@househack.com. Yeah, that'd be better. So, all right, 1 minute to the JOLTS data. Who's ready? Who is ready? Bum bum bum. We're expecting 8 mil flat. 8 mil. 8 mil. And keep in mind, job openings could be from temporary positions. I personally wouldn't be surprised if you have more temporary positions open. So I think you're probably going to beat this number here. So we'll see what's going on here. All right, 40 seconds to go. And look at that Bitcoin move, though. Tesla down 1%, McDonald's 40 basis points up, Crocs down 18.5, PayPal 6.5, Nvidia's flat, DR Horton's down 12, MicroStrategy's up 4, Bitcoin up again. The Qs are now up about 10 basis points, SoFi's down 11, Enphase down again, Google up 75 bips, Apple's pretty much stable. And don't even look at the 2x leveraged MicroStrategy. Oh my gosh, it's too hot. Too hot. 7% on DJT. Here we go. And the JOLTS numbers coming. Oh, big miss. 7.4. 7.4 million. Blow. Not ideal. It's a big drop there in the JOLTS numbers. Let's see what just happened there. The data is not out yet. Well, I mean, the data's out, but the report's not actually out yet. Come on, man. Because and the prior one just got revised down almost 180,000 as well. So prior release gets revised down 180,000. And the current release misses by like 600K. That's almost 10% of a miss there. So weaker jobs data right there. And it looks like, I mean, that shouldn't be great for risk assets. But yeah, you're starting to get that red candle over. Oh, here we go. Here comes Rick.
7,443, and last month's was revised. It came in at 8,040,000. It's now coming in at 7,861,000. So this now becomes the lowest read going back to January of 2021. January of 2021. In terms of the Conference Board consumer confidence numbers, they are coming in, trickling in. I don't know if there's an issue this morning, but
big beats on confidence, big beats. But remember, those are lagging indicators. Those aren't leading indicators. Job openings are a leading indicator.
At 108.7, 108.7. That ends up being the best level since January of this year. It's the second best level of the year. And if we look at present situation, it comes in at 138. 138. That follows 124.3. That's a blowout number. That's the best since May of this year. And finally, what may lie ahead in the form of expectations, 89.1 blows away the rearview mirror at 81.
89.1 versus the 81.7. So expectations good here. Not great on JOLTS. Let's go figure out what happened, though. Let's get into some of the details here, shall we? So let's see. Little change. Last day of September. What is this? 7.4. Hires changed a little. Number of total separations unchanged. Quits, layoffs changed a little. Estimates, job openings 7.4. Number of job openings decreased. Okay, let's actually annotate this. So the Conference Board numbers were great here, but JOLTS report definitely some weakness compared to expectations from analysts on this JOLTS report. Okay, here we go. This is going to be a little easier to do. So what happened here? We had decrease in healthcare and social assistance. Okay, this is annoying. I can't highlight. You suck. Okay, fine there. I will just use this. Okay, here we go. So healthcare and social assistance, negative 178. State and local government, negative 79. So the hiring's over for the government. Well, maybe not over. It's just a reduction. Oh, but you had an increase in finance and insurance. Wow. Okay, now that's interesting. That's good. That's actually what you want to see, because you want to see less government hiring. That's actually good. That's a good thing. Okay, total separations, quits, blah, 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 number of separations, down a little bit over the year. Quits were down over the year about 500,000. That's good. Quits decreased in professional and business services. That's good. But increased in state and local government. Okay. All right. So then we had 1 to 9 employees, little to no change. While layoffs and the discharge rate increased. Okay. Little to no change with 5K or more. Got it. August revisions revised down. Okay. Let's get a little bit more here. So, let's see here. Job openings, hire separations. Let's go with job openings and hiring levels. Let's look at some of these. So these are hiring levels right here. Okay, hiring levels by rates and region. Total private. Here's September. This is the September report, mind you. Change from a year ago, just 0.1%. So pretty nominal. And where was the hiring? Let's see here. Manufacturing actually saw some hiring month over month in September. Wholesale trade down a little. Finance activities, okay, whatever. Seems pretty benign. There's government. Doesn't seem to be anything freaky in the JOLTS report. Here's government. This is your not seasonally adjusted layoff rate. Layoff rate at government in thousands was way lower in September. Leisure and whoa, that's a pop-up in leisure and hospital. Actually, that's potentially the biggest category right there. Yeah, it is. Layoff and discharge rate. Look at that layoff. Look at this section right here. This section. So your total leisure and hospitality, 2.4% increase in layoffs. And another place you saw this was total private. Yeah, but the layoff rate was 1.2% back then. It's about 2. Yeah, it's not much higher than what it has been. So that's not necessarily a big deal. And then here you go, hires, negative for 0 to 9, negative for 10 to 49 from a year ago, flat for 50 to 249. I mean, every category is either flat or negative. That's not ideal. That's the private. That's job openings. These are hires. These are separations. Oh, and those numbers are positive. Layoffs, those numbers are more positive. Okay, this is the chart you want to pay attention to. Let's print this one out. And when I say print, I mean save as PDF. Okay, JOLTS, layoffs. So, do I still own Enphase? No, I don't have exposure to Enphase. Unfortunately, I parted ways with Enphase in the 3 digits. This is the lower 3 digits. Okay, so now let me pull up that doc. Okay. Stand by. Because I think this matters. So this is job openings, hires, separation levels. Job openings, hires, separation levels. Okay, yeah, right. And then they give us the different categories here. Okay. Just make sure I understand this correctly. Get my little handy dandy stupid Adobe highlighter here. I really needed new PDF software. I still can't find one. All right, so this is interesting. So first of all, these are job openings. Okay, and what I want you to do is I want you to look at August to September. And now, in fairness, this is seasonally adjusted. That's table 7. So I wonder if we can get the non-seasonally adjusted. That was, what do we call it? Job openings, hires, seasonally adjusted, not seasonally adjusted. Okay, yeah, there we go. That'll be the table 14 is not seasonally adjusted. So I'm going to save that one so we can compare seasonally adjusted to not seasonally. JOLTS, layoffs, not seasonally adjusted. And we're going to compare to the two, and we'll see what we're up against. So first of all, let's look at this category. So we got seasonally adjusted. You've got negative for openings. Negative. This is all from the last month. And then we go total private, negative. These are hires. So you actually did have some positive here. Oops, let me use a better color there. There we go. Some positive. But it's wherever it's positive, it's pretty nominal. These look pretty bad. Let me do this like this. It's not letting me highlight the numbers for some reason. Okay, total separations. That's a big bump in separations right there. 0.6. Those are negative, so that's okay. I mean, so far somewhat mixed. I don't know that it's... What is this? This is layoffs and discharges. That's not ideal. And then those are title separations. Those are pretty nominal. So this is nominal. So I guess if I was going to look at this, I'd be looking at job openings. Almost all the job openings are negative, right? So it's just sort of an early indicator of a slowdown, but it doesn't seem like you have those layoffs yet. So still no indication of major pickup in separations. But, oops. But every category is flat to negative on openings. So I think that's worthy of paying attention to, right? Okay. Use blue beam. What the heck is that? I'll have to look into what that is. Okay. So then let's go to here, the not seasonally adjusted numbers. Okay, these just show rates. Okay, well, I can figure the negative portion. So I don't know why they didn't do that for me. They did it in the last one. What are they hiding? Okay, so here are the opening rates. So this is negative 0.2. Oh, yeah. This is negative 0.8. That's not great. Can I just hit enter? Yeah. Negative 0.1, negative 0.1, negative 0.1. Oh, plus 0.4, negative 0.4. So the only category that actually showed you some love here was right here. That was the only category. Otherwise, all of these stinkers had negative job openings not seasonally adjusted. So there's only one. In NSA, only one category grew job openings. All others down. I mean, that is not a great trend, but okay. So, and then these are hires, negative. I'm not going to write down exactly what these are, but I'll just quickly go. That's negative, negative, flat, negative, negative. That's positive. So I don't know who these people are. That one's negative. Total separations. And, oh, well, that's actually decent because you had fewer total separations here. And again, is that by this category again? Yeah, it's this guy. I don't know who this is. This 1,000 to 5,000 employees size. But also this one. So yeah, same thing though. You're not really getting those separations. And you're not getting that quits. That quits rate plummeting. Look at that quits rate plummet. So this is September 23, August. I mean, you're pretty low. Is that how you are on seasonally adjusted as well? Quits. Yeah, quits rate's falling. Well, that is an example of more potential stress in the job market too, right? So quits rate falling, lower separations, and again, less hiring, or fewer openings. Okay, interesting. So now what I want to do is I want to quickly look at what the suits are saying about this, because sometimes the suits have some extra commentary on this. Yeah, consumer confidence came in great. Okay, I'll write it down. Blue beam. Okay, I wrote it down. Blue beam. Oh, the construction software. Oh, I feel like somebody's recommended that before. Maybe I gotta try it. All right. Okay, let's get data sends mixed messages. JOLTS provides another swing at the prevailing narrative, far short of expectations. But then you had strong confidence by the consumer. Well, everybody wants to be confident going into the holidays. Just a little data. Come on, man. Give me some opinions. Was I the only one talking about this stuff early? Yep. Job opening revisions, big downs. That's a good one. That's actually a funny chart. Zero Hedge could be a little jaded, but they're like, this was the August JOLTS report, way above estimates. September JOLTS report, way below estimates. It just makes you wonder, like, what is going on? I don't need CAD editing capabilities. I need a good PDF editor. I just go to my iPad when I really need a good one, because then I use PDF Expert, and it's amazing. Amazing. So, but a good thing, like an app or something I could just download on the PC, and, PDF Expert doesn't exist on PC. It's a scam. It's a shame. Everything's a scam. Okay, let's see what else there is. Job openings in September were revised down for August. 3-month movement. Oh, here we go. So this is an interesting one, because you have Nick T. Nick T, ratio of job openings to unemployed, now below 1.1. This is the lowest level that you have been at. Folks, you can't just stop this. This is the problem. You can't just stop this. It's very hard to put a stop on this. Very, very hard. Foxit. Okay, I'll write down Foxit and Bluebeam, and I'll report back to you. Somebody's asking what suits do I like? House hack suits. I'm just kidding. House hack doesn't make suits. No, I like Hugo Boss. Yeah. I'm not sponsored or affiliated with them or anything, but I've tried a lot of different suits. Even like I hear people like they pitch Indochino and stuff. Indochino, in full disclaimer, they sent me a couple suits, and I'm like, can I send these back? I felt bad, but it just Hugo, for the price you pay compared to what you get, amazing. All right, so. Let's see here. Okay, let's do a little bit of a summary of what just happened, so we could try to put this together and understand it a little bit. At the same time, yeah, I want to watch also what SoFi's doing. Oh, yeah. And then, the Qs are positive, though. All right. Oh, yeah, I don't buy Hugo Boss at JCPenney. I buy Hugo from Hugo.com. Okay. Here we go. Here's a mess. Whatever. All right. Oh, my volume adjusted. Sorry. All right, here we go. Well, what just happened with jobs data? Because we just got a shock. As in, we were expecting to have relatively stable jobs data, and I don't know what it is, but other people are pointing this out as well. Last month, we have this big beat, and the jobs data, the job openings are great, everything's fine. Maybe it's seasonal hiring for FEMA work, or seasonal workers at Amazon, or, I don't know, poll workers, right? But now what do you have? Now they tell us that job openings were actually lower last, in August in the last report. We went down from 8.04 million openings down to 7.861. And then this report, which was supposed to come in at 8 million, comes in at just 7.443. Now, the details of these reports matter as well. And you've even got Nick T tweeting about it. And let's just put it this way. He doesn't sound that optimistic about it. In fact, here you go. You can follow me on Twitter, by the way. I'm at RealMeatKevin, or as many of the Elon fans like to say, X. Well, everybody, I suppose, should say that because that's what he wants it to be called, but whatever. Also, there's this little note. Musk says there's a 10 to 20% chance that AI goes bad. Not sure why that's there, but whatever. We'll give it a like because I like that account. So, Nick T, whom I also like, so I'll give them a like. Job openings fell in September and were revised down for August, putting the 3-month moving average at its lowest level since the reopening in the spring of 2021. There were fewer than 1.1 posted job vacancies for every worker counted as unemployed in September. This is not great because look over here. What did you get into the plummet in the Great Recession over here? Job openings falling are very difficult to just stop. Like, once you start getting this collapse in job openings, it's very, very difficult to get it to recover. And the problem that you're facing is you're getting a lot of companies that are shrinking. Now, I'm going to go into the JOLTS reports in just a moment, and we can see some of this data a little bit more. Here, for example, is the 3-month moving average on these numbers. But I want you to just think for a moment. Look at what's going on with the consumer companies for a moment. I want you to look at SoFi. SoFi reports disappointing outlook for the future, next quarter and next year. What do you get? You're down 7.3%. McDonald's, home of affordability, and E. coli up because affordability is challenged. Crocs, flat revenue growth, down 18% today. People are so challenged on affordability that they're now buying smaller homes. Instead of buying homes, they're buying more attached townhouses. This is what D.R. Horton said in their report this morning. And they're buying homes that are a smaller square footage than ever before. As a result of that, what do you have? D.R. Horton stock, home builder stock. What do you got? Down 12.5%. Just got a notification as I'm filming this here. Somebody signed a bond agreement for $50,000 of an investment into HouseHack. Thank you so much for that. We'll take great care of you. If you don't know about that yet, go to househack.com. You can invest. You get 100% of the upside in the company, and you get paid a 5% yield. It's kind of like the offering that Tesla did in 2014 that did really well. They pay you a yield and you get upside, which is pretty awesome. Learn more about that at househack.com. But let's focus on this. I mean, the consumer is suffering to the point where even when you look at United Parcel Service, UPS, people are like, oh, their revenues were so great at earnings, and the company actually jumped after earnings. But it bled right back out because when people started reading into the details, they're like, wait a minute, UPS is only doing well because they're squeezing out a little bit more efficiency. They're actually firing long-term workers. They think this holiday season, will be more, quote, tempered than expected. And while the consumer is strong today, nobody knows how long it's going to last. See, we did have consumer confidence numbers that came out this morning, and they were fantastic. Well, no duh, the stock market's at all-time highs. Consumer confidence is one of the greatest lagging indicators. When the stock market goes up, consumer confidence goes up afterwards. It happens almost every single time. Just look at the charts. Well, when people lose their jobs, they stop praying for deflation because they start realizing that deflation leads to wage deflation. And so what do we actually have with the data? Well, look at the data. I'm going to take you into the tables because I like to go into the tables. I want to see the details. What do the details say? I always say the proof, the devil is in the details. Table number 7, still no indication in a major pickup of separations, like layoffs, right? But that's okay. I wouldn't expect that in a September JOLTS report, which is what this is anyway. I would expect that in January, not now. I expect layoffs in January, just like I expect Donald Trump's stock to continue to get halted as it's on its meteoric rise. Although today it's gone from like positive 20% to minus 2.8%, and now it's halted again. But that's really a topic for a different video. So what do you have over here? Job openings. Every category in seasonally adjusted job openings, folks. Every single category. Negative, 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 negative. Well, here's one flat. And then negative. So keep that in mind for a moment. The outlook for new hires, flat to negative. That is not an excellent outlook. And I want to clarify on SoFi. I should just mention that their forecast was for growth, but only 3.4% growth on SoFi. And that was deemed much weaker than the market had expected, because in this last quarter, they actually had a great beat. They beat by 12% on adjusted EBITDA. They beat by 8.6% on net revenue. But when you go from 8 to 12% beats to forecasting a 3% beat, markets start going, oh, where'd the growth go? It's kind of like with Crocs. You know, Crocs tells you flat going forward, not great. Growth forecast disappointed at PayPal as well. You know, where United States sales are going up is at McDonald's. McDonald's international sales missed this morning, but US sales were up because people are trading down to McDonald's. I hate to say it, but it's true. In fact, in recessions, McDonald's actually performs less bad than other stocks usually. But anyway, take a look at this. So you're negative to flat on every category on job openings. You still got some hiring going on, though some people wonder how much of this is, you know, seasonal. Again, this is supposed to be the seasonally adjusted report, but even the hiring is pretty flat. I mean, +1, -1, +3, +1, -1, +1, 0. These are pretty flat numbers on different sizes here, right? You're not really getting a massive separation yet. In the smaller companies you are, in the larger companies you're not. Okay, it roughly evens out, right? And then you're really not getting people quitting, which is very normal, because when people start getting nervous about their ability to get a new job, people stop quitting. You're at the lowest levels of quits compared to August or last year. You're at the lowest levels of quits. Normal. If you go to the non-seasonally adjusted figures, so we go from seasonally adjusted to non-seasonally adjusted, all categories for job openings are down with the exception of one. You have 1,000 to 5,000 employees positive, but outside of that, -0.2, -0.8, -1, -1, -1, +4, -4. So this is overwhelmingly negative. Again, the quits rate is falling, signaling less confidence in job place, and you have lower separations, which is normal. But folks, once this layoff cycle begins, it doesn't end, and I think it's probably coming January or February. I think you've got one last little hoorah where companies are like, yeah, we squeezed some margins. Yeah, we beat on Q3 and Q4. Yeah, holiday season. Yeah, let's keep our workers. What happens in January? In January, people start saying, that's it, we're cutting. Guess what Starbucks is doing? Starbucks come January, if you're not back to work in the office, you're fired for their corporate staff. That's the kind of stuff that's going to keep happening. It's going to get worse in January. I think the worst of the jobs reports aren't coming now during the holiday season. They come when people are truly out of monies and the dollar hollers in January and February. It's not great. This is why we're raising cash with House Hack, because, you know, if we get a lot of deals in real estate next year, we want to be the ones shopping. So anyway, you can learn more about that over at househack.com. If you want to learn how to buy houses yourself as well, you could go to meetkevin.com and learn all about it. We got a sale going for another couple days over there. But let's analyze for a moment the JOLTS job openings, and let's just take a look for a moment at the historical job openings level. I hope they've already updated this, which is fantastic. So this is just a historical chart on the St. Louis Fed. Unfortunately, they started this over here in 2001, but even in 2001, 2000, you could see this peaked out. The recession began in March, and you get a downturn associated with a recession. Just like you had a downturn in the JOLTS associated with the recession in 2008. Oh, but maybe this time is different. You know, you can also go to the quits levels here. Let's see, construction. Oh, let's look at construction for a moment. Let's look at construction. Yeah, it drops again a little bit. Not a surprise. You really probably have to smooth this out. So if I go with the quarterly reads, quarterly doesn't look too good. Usually that's a recessionary indicator. D.R. Horton also this morning mentioned that they have shorter lead times now in the building of new homes, which is an indicator that construction is becoming a little bit more available. Not great either. And then the quits rate is usually something we watch as well, just as a tell that when times get harder in an economy, people are less confident about their jobs, they quit less frequently. And you can look right now, the quits rate is at 1.9, which is actually as low as what we saw in about 2002 and 2003. It was not this low in 2005 and 6, hit it again in the recession, and after the recession, we were even lower. But you didn't see this in 2016, 17, 18, post-pandemic. Obviously, during the pandemic there, you had some quits. So I don't know if it's necessarily like horrible data, I wouldn't say. I don't think the data is horrible at all, but it is a red flag that some of the data that we got in September, in September for August, might end up getting revised down substantially. And we've got a lot more jobs data coming. Not only do we have earnings this week that we're going to be paying attention to, but we're going to be paying attention to the ADP private jobs report tomorrow, unemployment claims, and the Challenger report on Thursday, jobs report on Friday morning. I'll be covering it all. And then, of course, today in the afternoon, I'll be live for this as well. We'll have a market closing live stream on the Market Live channel. AMD, Google, Snap, Chipotle, First Solar, Visa, and EA. As always, if you have questions about investing in House Hack, where you get that 5% yield and all of the upside in the stock. So it's different than just having like a treasury bond, right? It's all the upside in the stock and a yield. Learn more about that over at househack.com. And if you have questions, you can always email us at ir@househack.com. If you have questions on the courses on building wealth, email us over at staff@meetkevin.com. And if you want personalized financial advice from myself and the team, no advice goes out the door without going through me. I was working with my team on clients yesterday while we were in flight to some house hack properties. Go to stockhack.com. Book an intro call. It's totally free to book an intro call, and we could talk to you to see if the service is right for you, and if you have any concerns with the service, you could ask for it. But the goal for us is to not just like work with you for 2 weeks and then forget about you forever. It's to actually constantly be your financial coach. We actually call it your financial agent. I think it's the easiest way to look at it. It's a very, very different service than what people are used to. It's really just working with you over the long term to build your wealth. So we're really excited about it. Learn about that over at stockhack.com. So anyway, folks, thanks so much for being here. We will see you all in the next one. And DJT, let's do a quick little final check on DJ Tizzle. DJ Tizzle is sitting. Oh, where'd it go? It's suspended. Oh, that's why I couldn't find it. Suspended at about 47.28 right now, so we'll see where it goes. All right, folks, we'll see you in the next one. Thanks so much. Goodbye. Good luck. We'll see you in the next live.